as it should be.
Trump tariffs continues to be the big story that we are tracking for you this Friday morning. And if you thought it was all about the economy, well, it's time to think again. Trump tariffs seem to owe more to geopolitics than pure economics. Well, Donald Trump has signed an executive order last night, and as many as 70 countries have been slapped with tariffs ranging from 10% to 40%. However, India still continues to be in the 25% tariff. We will discuss the fallout of this and what it means to consumers here in India, exporters from India, as well as those in the US. That's the big story. But also, stock markets reacted quite reasonably yesterday. Let's see how the mood of the market turns out to be and what should investors do in volatile times like these. We'll bring Devan Mehta on the show to discuss that. Good morning. I'm Karthik Malhotra. You're watching Morning Brief at 9. D-Day not anymore. It's now August 7th when tariffs come into effect. We will discuss that on the show today. But first up, let's look at the headlines. India's oil refiners pause Russian oil purchases. At least 4 state-run companies have not bought Russian crude since last week, says a Reuters report. No official response from the government or the refiners just as yet. US Treasury Secretary Scott Bessent criticizes India's trade stance and Russian oil imports as Trump imposes 25% tariff and calls India a dead economy. Union Commerce Industry Minister Piyush Goyal rebuffs Trump's dead economy remark, says India is the fastest growing and set to become the 3rd largest global economy. Meanwhile, Trump's 25% tariffs that now come into effect on August 7th on most Indian goods may raise US healthcare costs, hurt Indian pharma profits, but boost medical device exports if China duty gap holds. India surpasses Japan to become the world's 3rd largest solar energy producer with 1.08 lakh gigawatt output, with a push for 500 gigawatt clean energy target by 2030. The Enforcement Directorate summons Anil Ambani in a 17,000 crore rupee loan fraud case. SEBI flags 10,000 crore rupees fund diversion via undisclosed related party. Elon Musk's Starlink gets nod to launch satellite internet in India as centre marks 30 years of mobile revolution, highlights digital transformation milestones and 5G leadership. Zomato founder Deepinder Goyal launches LAT Aerospace to build India's first indigenous gas turbine engines led by engineers and free from bureaucratic hurdles. Air India Boeing 7879 Dreamliner aborts takeoff at Delhi airport amid technical glitch. Passengers delay. DGCA audit flags 51 safety lapses. Let's start with the tariff and the economic fallout expected from the Trump tariffs, which are going to be imposed on India on August 7th, unless, of course, the pause button is hit again and Donald Trump offers a fresh extension. Now, SPI Research has released a report which outlines what could potentially be the economic fallout for India as well as for the US when it comes to these tariffs. Well, tariffs in US, in fact, tariffs on India from goods being imported into the US are likely to spike inflation across the US. Inflation could spike as much as 2.4% as per SPI and could cost US households $2,400 each every year. But it's not just the US and the inflation in US which is going to be the victim. In fact, even India's GDP could take a beating. Remember, India exports as much as $80 billion worth of goods to the US every year. Now, India's GDP, owing to this 25% tariff which has been slapped on India, could face a decline of as much as 25 to 30 basis points in the ongoing financial year, that's FY26. Meanwhile, even as clarity is awaited on whether or not the pharma sector and electronics exports are going to be exempt or not from the latest wave of tariffs, there is a chance that if the 25% tariff is slapped on these sectors as well, then there could be a major blow to India's pharma as well as electronics exports. Meanwhile, India's BRICS push is likely the trigger behind the trade fallout, and that seems to be what the SBI research believes as the geopolitical angle to the tariff trade with India. Now, also, the US remains India's top export market despite the tariffs imposed at 25%. All right, and this is what SBI research report has come out with. This is the economic fallout of the trade with US and how that is likely to impact consumers both in the US as well as in India. Well, meanwhile, Indian-run state refiners have paused Russian oil purchases over the past week as discounts tightened and US President Donald Trump warned of 100% tariffs on countries buying Russian crude. Remember, India, the world's third largest oil importer, has been a key buyer of Russian seaborne oil, crucial for Moscow. And there's also breaking news coming in right now. US President Donald Trump has signed an executive order for new tariffs on almost 70 countries, which is yet to go into effect. The August 1st deadline has now been pushed by 7 days to August 7th. The list includes India, which will have to pay a 25% tariff effective 7 days from now. Earlier, Trump had announced that India's tariff rate would be effective August 1st, but the executive order signed for 69 countries with India on the list says the new tariff rates will be applicable from August 7th. Well, we have a very special guest joining us this morning. Economist Lavish Bhandari joins us with all the latest to be discussed on this trade war with the US. Mr. Bhandari, good morning. Thank you so much and a pleasure having you here on News 9. Not surprising, really, the August 1st deadline has now been pushed to August 7th. There has been absolutely no headway as far as India's negotiations with the US go. The sixth round is slated for August 25th, but until then, it seems that the 25% tariff is here to stay. Meanwhile, we are also hearing, in fact, a research report by SBI which states that India's economy, India's GDP could take a 30 basis point hit. Meanwhile, inflation in the US could spike about 2.4%. What are you making of the economic fallout first of the trade war, so to speak, with the US before we come to the geopolitics of it?
So first, I don't think we should see it as a trade war at all. I mean, this is a set of actions that the United States is taking on a whole range of countries, not just India. Of course, the US has been quite intent on trying to find some sort of a solution, but at the same time, it is fairly clear that India held strong to whatever its objectives were. So I see this as an ongoing negotiation process. It's just a matter of Trump essentially carrying out some of the threats that he had said, but at the same time giving certain leeways to it. So I don't think we should see it as an end all. This is work in progress, and it's hopefully going to get resolved soon.
Well, hopefully it will get resolved soon, but Mr. Bhandari, that is something that we've been hearing right from the month of February, in fact, this year, and it's August 1st in India today. So it's been a few months. There have been multiple rounds of negotiations, and it seems that at one level, perhaps Donald Trump is adding more pressure on India to quickly come and sign the deal. But at another level, it also seems that it's the geopolitics of Russia, the fact that India is part of the BRICS bloc, the fact that India imports, not just India, in fact, even China imports energy from Russia. India has a military love affair, so to speak, in Donald Trump's language, with Russia. I want to understand from you, how crucial is India's equation with Russia?
So, that's all clutter. This is all about political economy. It is not geopolitics. Yes, there is a Russia problem, and that is a part of this whole process. But I think the real issue has to do with countries imposing tariffs on countries which are not being too friendly to the United States in terms of trade. And so this is the political economic issue. The issues or the tensions are related to agriculture and dairy, and those are issues which are politically very sensitive in India. and it so happens that they are that as for the United States as well. And then on top of that, there's geopolitics, and then of course that India has been buying Russian oil, but I think that is an add-on. I think that part is an easier problem to solve than the one that.
Why do you say that's an easier problem to solve, Dr. Bhandari? Because that seems to be a more difficult problem to solve, given the fact that we still get Russian oil at a discount. While the discounts have tapered, it's not as deep a discount as it used to be. But the fact that in case India and China were collectively not to buy oil from Russia, there's going to be pressure on OPEC, and the increased demand could in fact spike global oil prices, and that may be detrimental to India's cause as well, wouldn't it?
Yes, but that's an economic problem. Economic problems typically are easier to solve. Political, economic, and employment-related issues are far more difficult, and where the government has to be naturally far more sensitive to the needs. So that's the point. Russia is something which we can solve, and it's just a matter of time before it would be. The issue essentially has to do with what do you do about Mr. Trump's desire to enter Indian agriculture and dairy markets, and India's desire to actually prevent that. It's as simple as that. It is a difficult problem, but there are always solutions. If you sit down and you talk and you work it out, there are many different workarounds for these kind of issues, but it's going to be a tough one. At the same time, this is a hardening of stance by Mr. Trump. What that means is the degrees of freedom that India had, that he himself have reduced. So it does look, things are getting tighter, but I would still see this as another step in the negotiation process.
All right. Well, of course, and added pressure on India, no doubt, especially the fact that the pendulum has swung from one extreme to the other, Dr. Bhandari, from India being a great friend and the fact that India was among the first countries to start the negotiations and the trade talks with the US. In fact, back in February, March, the estimation was that India would perhaps be the first country to go ahead and sign that trade deal with the US. And here we are. Multiple countries have gone ahead, starting with the UK, Vietnam, now even Indonesia, and a plethora of countries that have gone ahead and struck deals with the US. And meanwhile, the stance that US seems to be taking on India and the language being used seems fairly critical. So, for example, the US Treasury Secretary Scott Bessent yesterday on an interview on CNBC Global pretty much criticized India's negotiation process and said that India has not been a great global actor. In fact, he went on to say that the negotiators in Washington have been frustrated in their efforts to strike a meaningful dialogue with India. He's also accused India of delaying the process of negotiations despite initially showing interest, and he's also highlighted the concerns over India's role, like we discussed, in reselling Russian oil as well as refined products. So, and add to that, in fact, a few hours before that, Donald Trump going all out and calling the Indian economy a dead economy, pretty much defying all the data that's out there. So the language, the stance, all of this just seems to be a lot harsher today than perhaps the cozy equation that was enjoyed in the month of February and up till maybe, just a month ago.
Absolutely. And in fact, in February, they also said something to the effect that India is a hard negotiator, and we love that about India.
Exactly.
Right. So you're absolutely right. This is a hardening of stance. The US has not succeeded in breaking through into the agriculture and dairy domains where India has held forth. So you should see all of these statements as just part of that. What is surprising, however, is the maturity, or perhaps how India has responded to these. It has essentially not responded to many of these extreme statements. It's been very, very, to put it, measured in its responses, and that's really surprising, because I think in these times where countries can one day fight with each other and the next day become great friends and be on the negotiation table, has become quite natural. So I wouldn't be surprised if we start to see some of that from India as well. And I don't think it really matters. In the end, it's all about negotiation, who yields on what issues and in what manner.
All right, but we will come to India's response also, and let's also listen to what Piyush Goyal had to say. But before that, I want to just understand from you, and again quote the SBI research paper once again. If, Dr. Bhandari, India continues to be slapped with the 25% tariff, and let's say hypothetically there is no sweeter deal on the table that both the countries can agree on, then is the economic fallout on India likely to be catastrophic? Because even a 30 basis point reduction in GDP is fairly sizable, given India has been the fastest growing economy, racing to cross Japan by end of this year, Germany by end of 2027, 2028. So how big of a dent, in your opinion, could this 25% tariff be for India's economic ambitions?
So it will not be catastrophic. So let's get that word out of the picture.
All right.
It would impact India's growth and its march towards 2047. And so essentially you would want a deal. And you would want the deal not just to be able to access US markets, but also for enhancing productivity domestically. It's extremely important to be able to do that to get high enough growth. So the 30 basis points reduction, I don't know the estimates and I don't know where they've come from, but I don't see, whatever be the number, it's not going to be a catastrophic event. It will, however, impact India's long-term march. The US, however, will be actually fairly impacted in a very limited manner. And so therefore, you can expect US to negotiate harder. They have less to lose.
All right, US likely to get impacted harder is the view coming in from Dr. Bhandari. Dr. Bhandari, you were also talking about India's measured response. Well, some quarters also saying that perhaps the response was a little defiant, if I can use that word, simply because the first response that came from India after this 25% tariff was announced was that India is going to continue to defend its farm sector, its entrepreneurs, its MSMEs. So do you also see a sense of defiance in India's response that, come what may, we are not negotiating on the farm sector, we are not negotiating on the dairy sector?
Absolutely. So it was defined, but it was still measured. It was not pointing fingers at the United States. It was just saying that we need to protect ourselves. So I think it was a very, very wise method of handling the situation. However, having said that, I think it's just a matter of time before we start to see stronger statements coming in from the Indian government.
All right, Dr. Bhandari, let's leave it with that optimism this morning. On August 1st, scheduled to be the D-Day for tariffs, now pushed to August 7th. But thank you so much for joining us with your input, Dr. Bhandari.
Thank you.
And let's talk about that response that came in Parliament yesterday. Union Commerce Minister Piyush Goyal has strongly rebuffed US President Donald Trump's remark calling India a dead economy. Now, speaking in Parliament, Goyal said India is not only the fastest growing economy in the world today, but also on track to become the third largest globally in coming years. He highlighted that India has risen from being one of the fragile five to the top five economies of the world due to major reforms and the efforts of farmers, MSMEs, as well as industry. Goyal also noted that global institutions now regard India as a bright spot in the world economy. Remember, Trump's comments came after he imposed a 25% tariff on all Indian imports, which were due to start on August 1st, citing India's continued trade with Russia and what he called the country's obnoxious tariff regime. Goyal responded by assuring the Lok Sabha that the government is actively engaging with industry stakeholders to assess the impact and will take all necessary steps to safeguard India's economic interests. Listen in.
मात्र एक दशक से भी कम समय में भारत फ्रैजाइल 5 अर्थव्यवस्थाओं में से निकलकर दुनिया की सबसे तेजी से बढ़ती प्रमुख अर्थव्यवस्था बन गया है। हम अपने रिफॉर्म्स और अपने किसानों, एमएसएमई और उद्यमियों की कड़ी मेहनत के बल पर 11वीं सबसे बड़ी अर्थव्यवस्था से शीर्ष 5 अर्थव्यवस्थाओं में से एक बन गए हैं। यह भी अपेक्षित है कि हम कुछ ही वर्षों में तीसरी सबसे बड़ी अर्थव्यवस्था बन जाएंगे। आज अंतर्राष्ट्रीय संस्थाएं और अर्थशास्त्री भारत को वैश्विक अर्थव्यवस्था में एक ब्राइट स्पॉट के रूप में देखते हैं। भारत वैश्विक विकास में लगभग 16% का योगदान दे रहा है।
And staying with the tariff story, experts from the pharmaceutical and medical device sectors warn that US healthcare costs could rise sharply after President Trump's decision to impose a 25% tariff and an unspecified penalty on Indian imports starting today. Well, originally due to start today, now pushed by a week. India is a major supplier of affordable generic drugs to the US, and trade disruptions could stall treatments and inflate drug prices. Industry voices say Indian pharma profits may dip, R&D could stagnate, and innovation may slow. However, the Indian medical devices sector sees a likely silver lining, which is if the US maintains a 15 to 20% higher tariff on Chinese exports, Indian exports may gain an edge. Experts also note that the risk of future sector-specific tariffs, even as hopes remain for a fast-track bilateral trade deal to stabilize long-term interests. Meanwhile, back in the US, late last night, India time, President Donald Trump has written letters to pharma CEOs asking them to give the most favored nation pricing to consumers of pharmaceutical products back in the US. And we'll slip into a short break, but coming up on the other side, we'll give you all the action from the Lal Street. Devang Mehta will join us on the show. Indian stock markets have opened on a somber note once again. Sensex is down about 0.15% or so in trade. We'll bring you all the action on the markets on the other side of the break.
एसोसिएट स्पॉन्सर डायना प्रीमियम ब्यूटी सोप पहली झलक करे खूबसूरत
खूबसूरत सी तुम कोई चिंता करो पीछे भरोसा खड़ा है तुम्हारे तुम नया कल बनाते रहो।
जब कोई हमारी बाकी चिंताओं को संभाल लेता है तो हम कर पाते हैं खूबसूरत सी कोई चिंता। टाटा कैपिटल में हम आपकी हर फाइनेंशियल चिंता को संभाल लेते हैं ताकि आप करें सिर्फ खूबसूरत चिंताएं।
सर ट्राई बेरी पुलाव टू गुड गुड नो Hey, why are you giving him such looks? Ignore tips and use your own mind before you order. Lots of people give unsolicited stock tips. It can be dangerous. Study the company and the risk associated. Invest only after analyzing.
एसोसिएट स्पॉन्सर एंकर टूथपेस्ट नए जमाने की नई सुरक्षा।
ये रोशनी का सफर दिलचस्प है, दिलचस्प है।
हम सूरज से सिर्फ बिजली नहीं बनाते हैं, खुशहाली को देश के कोने कोने तक भी पहुंचाते हैं।
ये रोशनी का सफर
अदानी, हम करके दिखाते हैं।
Welcome back. You're watching News 9. Let's bring you all the market action. Let's begin first with Asia. Remember, late last night, India time, US President Donald Trump has signed that executive order deferring tariffs to August 7th, but also coming with a tirade of tariffs all the way from 10% to 40%. Let's see how Asian markets are reacting to that. Well, not very positively, especially South Korea. The Kospi seems to be down more than 3% or so in trade this morning, despite a sweet 15% trade deal with the US. You also have the negative action flowing all the way across Asia, right from Hang Seng, which is pretty much flat, albeit a little bit in the red this morning. Even Taiwan's TAIEX is down about 0.5 percentage point. Japan's Nikkei 225 is trading about 1/3 percentage point down. Meanwhile, the Shanghai Composite Index is down about 20 basis points or so in trade this morning. Let's look at Indian markets, because Indian markets have also had a major swing yesterday. If you remember, markets had opened down about 0.75 percentage point, but during the first 4 or 5 hours of trade, markets had recovered to a point that they were in the green, but then we saw that reverse come back and hit Indian markets, and that's something that continues the momentum today as well. Sensex and Nifty are both down. In fact, so are the small caps and the mid caps, which had started a little better but now seem to be down this morning. Meanwhile, volatility, despite so much trade talk and tariff talk, continues to be low, below the 12 mark. But let's pull up the Nifty 50 heat map and see which are the sectors that seem to be reeling more in pain today. And the biggest loser right now, at least on the Nifty 50, seems to be Sun Pharma. That stock is down about 4.8% or so in early trade. Well, this is a direct impact on pharmaceutical sector feeling the pinch of the 25% tariff. And who knows, there could be another sectoral announcement specifically on the pharma sector. Meanwhile, even the IT sector responding negatively. Remember, the US Federal Reserve has not cut interest rates, and there are fears of the tariff leading to inflation in the United States, and that is keeping interest rates high and reducing the ability of US companies to spend money on services which Indian IT sector offers. Let's unpack all this with Devang Mehta, who joins us on the show this morning. Mr. Mehta, good morning. Thank you so much for your time. Pleasure having you here with us. Do unpack the reaction that you are seeing on markets, not just today, but also put yesterday into perspective, and tell us, how should investors really deal with the jitters and the flow of news coming from abroad?
Good morning. Thanks for having me on the show. Always a pleasure to be on News 9. I think, yes, what we saw yesterday and today is that probably markets have become a little more matured, if I can put it that way. And I'm no way saying that there can't be a negative reaction to what has happened. But I think this is impending since April 2nd, if I'm not wrong. The first week of April, this all started. And from April to May to June to July, and now we are into August, almost 4 months of uncertainty, if you can put it, or 4 months of volatility at least in the proceedings of the news rather than even stock prices. What we have seen is markets had a smart rally from mid of April, May. June, July is when markets sort of corrected and consolidated. I think what participants want right now from Indian markets is more clarity on earnings, more clarity on the commentaries going forward. Sentiment in India is good. Macros are, I think, superb. We can't argue about any macros, right from GDP to tax collection to manufacturing data to probably inflation heading lower to interest rates getting cut across the board. I think most of the situations are under control. Volatility is the only constant when you look at the global markets right now, because US are also making new highs, but you know that there also interest rates is a problem. Interest rates are not getting cut.
That's right.
The tariff tantrums are still lying. My sense, yes, markets from here on would consolidate for a bit, but I don't anticipate a larger correction on the end.
All right, no larger correction anticipated. I will come to certain sectors with you, but staying with the fundamentals that you were talking about, Mr. Mehta, I want to understand what is your view on the rate decision that the Indian MPC, the RBI's Monetary Policy Committee, should take next week, given the fact that there is this fear that tariffs are going to slow down growth in India. There is fear that there is overall going to be an impact on economic activity. Do you think it's time for RBI to go ahead, for the MPC, to cut interest rates once again, to spur that impetus back in the economy in the wake of this uncertainty around tariffs?
See, honestly, if you ask me, the RBI has done its bit in the last few months, cutting it ahead of times, doing a 50 bips cut, which was not anticipated in the last policy, making CRR cuts of 100 bips, of course, on a phase-wise basis. They also done a lot of OMOs. So my sense, it's a good fusion where government is doing its capex. Last year, it was sort of a mixed year where capex had stalled, but now government is doing its capex. RBI has already done rate cuts. I think the street is right now going with a no rate cut. If I understand it right, the consensus says that there is not going to be a rate cut now because the RBI governor has been on record saying that I front-loaded it. But as you rightly said, there is a growth slowdown also anticipated probably in India after the tariff tantrums and all. There can be a surprise rate cut, but as I said, we are not factoring in a rate cut right now. If it comes, it would be a positive surprise for the street, which will again sort of unleash the spirits that the corporate sector wants. But I think RBI has done enough. And if it is not done, but the commentary is again very dovish, I think market will take it with a lot of big heart.
All right, Mr. Mehta, let's now talk about certain sectors which are feeling the pain this morning, and the biggest pain seems to be coming from the pharma sector because, of course, a large market in the US now becomes 25% more expensive, and potentially there could be fresh pharma-specific tariffs that could be announced. Remember, way back, maybe, around the time that the Liberation Day tariffs on 2nd April were announced, Donald Trump had said that the pharma sector could see tariffs like never seen before. And the pinch is really being felt by Sun Pharma this morning. The stock is down more than 5% already, but Cipla Dr. Reddy is also trading about 2% lower. Is this just fear selling that you're seeing, Mr. Mehta, or do you think there is something which is a real cause of concern for investors in the pharma sector right now?
I think this should look like more of a knee-jerk reaction because markets have this tendency to behave a little ahead of time. So you can also say that right now, export-oriented sector, anything that has a US tag attached to it, would sort of lose its premium. Can it also trade at a little bit of discount? The answer is yes, because there is something called uncertainty. There is different thing called volatility. Right now, there is a bit of uncertainty which has come to the proceedings. So my sense is that, for example, a lot of domestic centric sectors look very interesting. Exports now again, I know that IT exports, there is no substitute for India as such. It can't be very negative on IT, but the sector itself is going through a lot of headwinds.
That's right.
On the US front, on the European front. But yes, specifically on pharma, I think it seems like a knee jerk, but I would also say that investors right now should probably wait for some bit of clarity and then get into sectors which are export oriented, which has a lot of its revenues tied to US.
All right, so exercise caution at an uncertain time like this. Mr. Mehta, I will come to the domestic sector also, which you spoke about. But before that, I also want to look at the energy sector, because the energy sector also seems to be a little mixed right now, given all that we are hearing on Russian oil import, EU sanctions on Indian refiners. Overall, the story for the energy sector, in fact, the week had been fairly bad for Reliance Energy as well. But Reliance seems to be okay this morning, but ONGC is down about 1.14%. Also, news trickling in that perhaps Indian refiners, as many as 4 state-owned refiners, have not purchased Russian oil for the last 1 week. My question to you, before you talk about the investor action on the energy stock, is how critical is India's oil import from Russia, and can India actually do without that discounted oil?
My sense is that oil imports are very, very important, and from why we are taking it from Russia, because it is also cheaper, it is extremely easier to access. The sense that I also get is that there will be more political rhetorics on the way, there will be political debates, there will be political gestures which will be done to sort of stop this. Very difficult to comment on this as not a political expert on this, but on the market front, on the investor side, if I can answer that question, I think it's very typically, this is a sector which is again very interdependent. Crude oil prices, if that rises in India, it has a lot of weightage on the deficit. It has a lot of weightage on input cost for a company. I think right now it is under control. Anything below 80, 85 is also a blessing in disguise. If it goes above 85, 90, and I don't think the global markets or the global economies are such strong that the crude grows above those levels. So I think it's not a bad situation for India to be in. I think India has its own very strong domestic market, and I think nobody can miss that market. That's very important for even the investors in US and the powers that be to realize that.
Right. So let us talk about the domestic consumption story, and that is the momentum that we are seeing on the Nifty 50 heat map, at least this morning, and that seems to be coming from the consumer, the FMCG stocks. In fact, HUL is up almost 4% or so in trade. Nestle is up more than 1%. Tata Consumers is up more than 1%. ITC is up about half a percentage point. There doesn't seem to be a positive trigger for this sector specifically this morning, Mr. Mehta. But is this a case that you are selling other sectors like pharma, IT, energy, and the cash is being now rechannelized into India's consumption sector?
Yeah, very, very good question. I think it was long overdue. The rally in this type of businesses, if you look at any of these companies over the last 2, 3, 4 years, most of the companies have sort of underperformed the broader market and even the indices. Now, what happens here is there's a beautiful thing called sector rotation that comes to the fore during such times when markets are consolidating or correcting. At that time, FMCG comes across as a safe universe to be in, and because you know that there has been a good sound bites around rural consumption improving, some of the management, some of the commentaries from them were quite positive about how rural distress is now less, or they have come out of rural distress rather. RBI report also talks about rural India improving. Monsoon has been superb so far. I think you are seeing a bit of consumption where I think the bottom of the pyramid was not consuming as much. I think there is some bit of improvement. My sense that these are companies which have underperformed largely. If somebody has an objective to put up money in the safe part of the portfolio, this will be 10-15% type of compounders over a period. But more money would typically flow into discretionary consumption, which is the aspiring Indian, right? The people shifting from necessity to luxury. That is something where I think a lot of travel tourism, a lot of lifestyle expansion companies would be preferred bets rather than getting into typical FMCG companies, where again this can only be a 3-month, 6-month type of a run, but a long-term aspirational Indian consuming more should be more a story of the next 5 years.
All right, Mr. Mehta, thank you so much for your time this morning and sharing all these words of wisdom with all the investors watching this show. Pleasure having you here with us. And moving on to other corporate stories, Anil Ambani, the chairman and managing director of Reliance Group, has been summoned by the Enforcement Directorate for questioning in a 17,000 crore rupee loan fraud case. He has been asked to appear on August 5th at the ED headquarters in Delhi. Now, this comes after the agency conducted searches across 35 locations linked to the group, targeting 50 companies and 25 individuals under the Prevention of Money Laundering Act. In a related development, market regulator SEBI has shared findings with the Enforcement Directorate and other agencies from its own probe, which alleges that Reliance Infrastructure diverted 10,000 crore rupees disguised as inter-corporate deposits through an undisclosed related party company. Now, a person close to Reliance Group disputes the claims, stating that Reliance Infrastructure's actual exposure was 6,500 crores and the diversion figure is exaggerated. The company says it has already reached a court-mandated settlement to recover the dues. SEBI has flagged issues of non-compliance and misreporting, further intensifying scrutiny of the Reliance Group. And in other stories this morning, India has surged ahead of Japan to become the world's third largest producer of solar energy, Union Minister Prahlad Joshi announced on Thursday. Now, citing data from the International Renewable Energy Agency, Joshi revealed that India generated as much as 108,500 gigawatt hours of solar power, surpassing Japan's 96,459 gigawatt hour. Now, the global body supporting clean energy transition recognized India's remarkable growth in renewable energy generation. The minister credited this achievement to the leadership of Prime Minister Modi, stating that India is now at the forefront of the global clean energy revolution. Remember, this milestone is a major step as India works towards its target of achieving 500 gigawatts of non-fossil fuel-based electricity capacity by 2030. And now moving from India's diversification in power to Eternal's diversification from delivery to flying high. Zomato and Blinkit founder Deepinder Goyal is venturing into aerospace with LAT Aerospace, his latest venture aimed at building India's first truly indigenous gas turbine engine. Now, in a LinkedIn post, India's past attempts at building gas turbine engines were acknowledged by Goyal, who stated that major progress had been made previously and expressed LAT's intention to successfully complete the effort. Now, LAT is setting up a cutting-edge propulsion research team in Bengaluru to design and build lightweight, efficient, flight-ready engines, all from scratch and all made in India. Now, Goyal said engineers will lead the charge without bureaucracy, which highlights that there will be no endless approvals, no business decks, just hands-on problem solving. And staying with the world of aviation, it seems technical snags on flights are becoming all too common these days. Another Air India Boeing 787-9 Dreamliner aircraft bound for London was forced to abort takeoff at Delhi airport on Thursday due to a suspected technical issue. According to the airline, the flight was halted mid-takeoff by the cockpit crew as a precaution in line with standard operating procedures. The aircraft was returned to the bay for checks, and Air India has since deployed an alternative plane to fly passengers to London at the earliest. The ground staff are assisting passengers to minimize inconvenience caused by the delay. Now, this incident comes just days after the DGCA audit flagged 51 safety deficiencies in Air India's operations, raising fresh concerns over regulatory compliance and operational safety at the national carrier. And before we slip into another break, let's look at some other global stories that we are tracking for you. Of course, tariffs continues to be our focus. US President Donald Trump signs executive order imposing new tariffs on nearly 70 countries, including India, with a 25% duty taking effect on August 7th, not August 1st, as previously announced. Donald Trump raises tariffs on Canadian goods from 25% to 35%, sets a 40% duty on goods rerouted through third countries, while House cites Canada's alleged retaliation and fentanyl in action. The United States lowers import tariffs on Thailand and Cambodia from 36% to 19%, signaling adjusted trade terms in the region. Donald Trump holds tariffs on Mexican goods steady at 25% as Mexico remains US's top import source and second largest export market. Trump slams US Fed Chair Jerome Powell once again as a mistake, criticizing the central bank for holding rates steady despite administration pressure to cut borrowing costs amid tariff-driven headwinds. President Donald Trump also says 17 major pharmaceutical companies must lower prices under his most favored nation policy or face aggressive enforcement to protect American consumers. Consumer prices in the U.S. edge higher in June as import costs rise, a sign President Donald Trump's tariffs are beginning to feed inflation. iPhone maker Apple warns of a $1.1 billion cost hit from Trump's tariffs in the next quarter. CEO Tim Cook says the total impact may exceed forecast if current rules hold. And the world's leading producer of AI semiconductors, NVIDIA, says its chips contain no backdoors after Chinese officials summoned company representatives over serious cybersecurity concerns. And we'll get you these stories on the other side of the break. You're watching Morning Brief at 9.
एसोसिएट स्पॉन्सर एंकर टूथपेस्ट, नए जमाने की नई सुरक्षा.
Go condoms?
It's over there.
क्या ये different sizes में आता है?
Actually, sir, size matter नहीं करता.
तो फिर क्या matter करता है?
The hardness
Of the condom.
of what's inside.
For the first time ever, presenting Hard Rock Gel, the hardness gel for men.
अब free हर score condoms के 10 पैक के साथ.
व्यू मस्त है और चाय भी बुरी नहीं है.
नए घर में चाय के मजे कहाँ लोगे? ये खूबसूरत चिंता आप करिए. होम लोन की चिंता हम संभाल लेंगे. With attractive interest rates and instant sanction.
ये रोशनी का सफर दिलचस्प है, दिलचस्प है.
हम सूरज से सिर्फ बिजली नहीं बनाते हैं, खुशहाली को देश के कोने कोने तक भी पहुंचाते हैं.
ये रोशनी का सफर
अदानी, हम करके दिखाते हैं.
Welcome back. Let's continue with the stories that we're following for you this Friday morning. US President Donald Trump signed an executive order late Thursday raising tariffs on Canadian goods not covered by the US-Mexico-Canada agreement from 25% to 35%. Now, separate 40% duty will apply to goods rerouted through third countries to skirt the new penalties. The White House cited what it called Canada's retaliation and failure to act on fentanyl trafficking as the reason for the hike.
Well, they have to pay a fair rate. It's very simple. They have been charging very, very high tariffs to our farmers, some over 200%. And they've been treating our farmers very badly. They've been treating our country very badly for years. And look, we like Canada. I love Canada. I have so many friends in Canada. But they've been very poorly led. They've been very, very poorly led. And all we want is fairness for our country. That's all. You know, they want to be under the, as we call it, the Golden Dome. And I said, well, you know, you're going to have to pay for that. They want a lot of things from our country, and for years we did it. We basically protect them with our military. They spend very little money on their military, as you know, not an acceptable amount of money.
And staying with news from the United States, it has announced a 19% import tariff on goods from Thailand and Cambodia, down from the 36% they initially faced after President Trump tied future trade deals to an end to the deadly border clash between the two countries. In a bid to avoid steeper tariffs, Thailand agreed to scrap duties on 90% of U.S. goods and reduce its $46 billion trade surplus with the U.S. by 70% over the next 3 years. Earlier this week, The leaders of Thailand and Cambodia agreed to an immediate ceasefire to halt the worst clashes between the two nations in more than a decade, which left more than 40 people dead. Now, Malaysia, which helped mediate the truce, will face a 19% levy. And US President Donald Trump also announced on Thursday that the US will keep current tariffs on Mexican goods unchanged for now. That means a 25% tariff will continue to apply on products from Mexico that are not covered under the US-Mexico-Canada agreement. Goods that are compliant with the USMCA will stay exempt from tariffs except for a few sectors where separate duties still apply. Remember, Mexico has become the top source of imports into the US, surpassing China. Now, American companies increasingly rely on Mexican goods such as cars, electronics, clothing and shoes, especially since Donald Trump and former President Joe Biden kept higher tariffs on Chinese products in place. Now, Mexico is also a key consumer of US goods. It's now, in fact, the second largest export market for the US, just behind Canada. And staying with US President Donald Trump, who on Thursday sharply once again criticized Fed Reserve Chair Jerome Powell, calling his appointment a mistake during his first term in office. Now, this comes after the central bank held the much-anticipated interest rates unchanged this week. The president and his administration have been pressuring the Fed to slash interest rates, arguing that lower borrowing costs are essential to counter the economic drag from global trade tensions.
Oh, he is. We call him Too Late. He's too late. It's his new nickname. It's Too Late Powell. He's terrible, the Federal Reserve Chairman. Not only that, he's building a building. He's at $2.9 billion. It's actually 3.1 if you include other areas that are essentially the same thing. Way over budget, has no idea what he's doing. And I would say he's probably good at that compared to what he does with interest rates. But, you know, we have him there, and it was a mistake. I put him in, and then Biden extended him. And Biden only extended him because he knew I couldn't stand him. And that turned out to be not a good thing for Biden. Although he did lower interest rates just prior to the election. Didn't work out too well for them. But he did lower them pretty substantially just prior to the election. No, he's a political hack, not very good. He's not a smart guy.
Meanwhile, US President Donald Trump again on Thursday said that he demanded commitments from 17 big drug makers to lower their US prices by committing to a most favored nation policy he laid out in the May executive order. Now, the move raises the stakes of pharmaceutical manufacturers as they brace for threatened tariffs on the pharma sector. President Trump said if companies don't comply, his administration would, and I quote, deploy every tool in our arsenal to protect American families from continued abusive drug pricing, unquote. Let's listen in to what White House Press Secretary Karoline Leavitt had to say.
As you all know, the president signed an executive order earlier this year to solve the problem of exorbitant pharmaceutical pricing. According to recent data, the prices that Americans have been paying for brand name drugs are more than 3 times the price other similarly developed nations pay. The president is determined to solve this problem and took further action today. He has signed 17 letters to pharmaceutical companies' CEOs.
And the impact of tariffs seems to be visible on the U.S. economy. Inflation in the country ticked up in the month of June as the cost of important goods began rising, an early sign that tariffs are starting to make their way into consumer prices. Economists expect price pressures to keep growing in the second half of the year as well, especially as the latest round of tariffs announced by President Trump take full effect. Now, many are watching closely to see how these inflation trends could influence future decisions by Fed Reserve Chair Jerome Powell. More details in this report.
U.S. inflation picked up in June as tariffs raised the cost of some goods for American consumers. That's according to a report from the Commerce Department on Thursday that showed prices last month posted their biggest gains since January. Prices for imported goods like household furniture and recreation products climbed higher in June, and the cost of clothing and footwear saw solid increases. The Personal Consumption Expenditures, or PCE, price index showed that consumer prices rose 0.3% last month, in line with expectations. On an annual basis, prices rose 2.6% in June, up from 2.4% in May. On a core basis, which excludes volatile food and energy prices, inflation increased 2.8%, hotter than expected. The PCE price index is the Federal Reserve's preferred forecasting measure. Its inflation target is 2%. Thursday's data supported economists' expectations that prices would rise in the second half of the year, due to President Donald Trump's tariffs and delay the Fed from cutting interest rates. After leaving interest rates unchanged on Wednesday, Fed Chair Jerome Powell's comments undercut confidence the central bank would resume cutting rates in September, as had been widely anticipated. The Commerce Department also reported that consumer spending, which accounts for more than two-thirds of economic activity, rose 0.3% in June. Economists expect a combination of pressure from tariffs and a slowing labor market to put the brakes on consumer spending in the third quarter.
And time for another short break, but when we come back, there could be a hit of more than $1 billion on costs to iPhone maker Apple. We'll tell you why on the other side.
एसोसिएट स्पॉन्सर एंकर टूथपेस्ट, नए जमाने की नई सुरक्षा.
Light, camera, and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week, don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Welcome back. You're watching News 9. Well, Apple's CEO Tim Cook has said the company expects a $1.1 billion hit to its costs this quarter due to U.S. tariffs. Now, speaking on the company's earnings call on Thursday, Cook noted that if the current global tariff rules remain unchanged, the total impact could surpass $1 billion. Now, that's on top of the $800 million in tariff-related costs Apple absorbed in the last quarter. And other stories from corporate America. Unilever beat second quarter sales forecast on Thursday thanks to solid performance in its ice cream division. Now, the company also reaffirmed its full-year outlook, signaling confidence in continued consumer demand. Here's more on how the consumer goods giant fared in its earnings.
Unilever's second quarter sales growth beat forecasts on Thursday. It said it was boosted by robust demand at its ice cream business, maker of Ben & Jerry's and Magnum, which will spin off in November as part of an ongoing reorganisation. Ice cream's underlying sales rose 7.1% in the second quarter, the group's fastest growing category. The Dove soap maker also maintained its full-year sales outlook, citing strong demand in North America and Europe. Over the last year, Unilever made several changes to address underperformance and boost margins. Alongside plans to demerge its ice cream business, refining measures included job cuts and changing its CEO. But alongside buoyant results, there was a 50% drop in free cash flow from last year in the first half. This raised concerns about financial strain caused by supply chain changes, tariff uncertainties, and costs with spinning off its ice cream division. But the Marmite maker will continue to focus its investment in the US, which it said is working, quote, really well.
And moving on, Kenya's textile sector is facing uncertainty as the new U.S. tariffs on exports are set to kick in now on August 7th. The industry had expanded significantly under the African Growth and Opportunity Act, but the new duties could undo much of that progress. More details in this report.
An economist says Kenya's textile industry may face renewed pressure amid changes to U.S. trade policy under President Donald Trump. The country is facing a 10% tariff on exports from August 1st. There are also concerns about the future of the African Growth and Opportunity Act, or AGOA, which has supported the development of Kenya's export-oriented apparel sector. The U.S. trade initiative provides duty-free access to the U.S. market for eligible African countries and is due to expire in September. Moses Muchiri Mwangi, an economist at the Institute of Economic Affairs, says it appears that AGOA may lapse.
If that happens, it means we have to go back to the drawing board and ask ourselves, can Kenya sustain its textile industry? Will investor be still willing to invest in Kenya textile industry? Do we have new markets? Can we still export to the US with the tariffs and the duties and still remain competitive?
In April, Trump announced a baseline tariff on all imports, citing the need to protect American industries. Muchiri said the uncertainty could slow capital investment and reduce demand for other imports like machinery used in textile production.
And therefore, of course, the effect will be less business for the port. Less business means less people employed on the same.
Kenya also exports coffee, tea, pharmaceuticals, and horticultural products to the United States. But Muchiri noted that apparel exports have benefited uniquely from duty-free access.
And remember, in terms, let's say textile, which Kenya is a major producer of the same towards to the US market, it has competition from all over the world, and the other people probably producing more efficiently than we are.
According to the World Bank's 2024 Kenya Economic Update, the country has struggled to diversify its export base despite global trade growth. It attributes the issue partly due to domestic inefficiencies and protectionist policies.
And with that, it's a wrap on this edition of the Morning Brief at 9. Thank you so much for tuning in, but news continues right here on News 9.
एसोसिएट स्पॉन्सर एंकर टूथपेस्ट नए जमाने की नई सुरक्षा.
On this special edition of the Brandwalas, we get you the best of the best. This is the best of Brandwalas.